Welcome back, everybody. It's Xavier with the charts, talking a little bit about Disney. For those who have been following, recently Disney was considering, or I should say, an investor who is a fairly large portion of the Disney stock was talking about whether or not Disney would keep their dividend basically and utilize the funds towards their streaming services. And I really don't see a lot of growth going on with Disney. I don't perceive that Disney will basically be growing over the next couple of years, especially what we're seeing going on in the different states like California, for example, where the theme parks have basically been shut down, forcing Disney to basically lay off huge portions of their employees as a result of not being able to make any sort of headway with many politicians. And of course, as an investor, this is something that we always have to take into consideration.
We're looking at these 4 tiers, color coded, making it a little simpler for folks: purple, red, orange, and yellow. We don't put up green because we don't believe that there is a green light. It just says go back to the way things were, or back to the pre-pandemic mindset. Quite the contrary.
Where companies basically lose control of how they can perform businesses due to politicians. And of course, Disney being heavily into theme parks is almost not only between theme parks, but also with what's going on with the social justice warriors in sports. And of course, ESPN is also being hurt. One of the things I really didn't like about the Disney streaming services was that it's predominantly geared towards families, and we're not really seeing the growth of the families within Western culture. Not only that, we're seeing more and more men remaining single, and of course the divorce rate is just getting higher and higher and higher, as well as with the falling birth rate here in the States. And that's really within a lot of Western countries that are experiencing that problem. And I believe that that will impact, Disney's design, or Disney's trend with basically creating content that is for more family friendly audiences. It's one of the reasons why I would rather stick with companies like Netflix that is creating more adult content. Even for example, Time Warner, with owning HBO Max, a lot of the content that they're creating, of course, is for the older adult. And so that's one of the reasons why I think that they'll be more successful in the future. So it's one of the reasons why I got rid of Disney. Also because it doesn't pay a dividend. It's not really, doesn't fit into the portfolio of what basically I'm creating, which is a dividend cash flow portfolio. And of course, this is for early retirement. The goal for this portfolio, of course, is to generate income. And of course, the goal is for roughly around between 250 and 300,000, generating roughly between 15 and 1800 a month in dividend income for the portfolio. And so Disney really doesn't fit into that model. And so there were some other stocks that I was looking. So I ended up getting rid of that one, and I ended up getting rid of it also in my IRA. So I sold it both in both stocks, in both portfolios, ended up taking that money and then just flipping it into the portfolio. And then I basically swapped in, at least for my retirement, I ended up swapping in ABVI. I felt ABVI was a much better fit for the portfolio. One, of course, there's room for growth. And two, of course, there's opportunities for a pretty decent dividend. It pays just over 5%. So it fits much more into the portfolio, which is what I'll probably also do for my main portfolio. Currently sitting at just around 1,700 in gains, with 350 of that, of course, coming in dividends. And of course, that will start to snowball as we've been adding quite a bit to the portfolio. Finally hit the 18K mark in the dividend portions. But of course, just about everything in this portfolio pays a dividend. One of the changes, of course, that I will be making in the future for this portfolio, like I said, I did here, which was I got rid of Disney, which was in this part of the portfolio, and I will more than likely also get rid of Google and Facebook in favor of reallocating those funds into companies like Nvidia, Apple, Microsoft, Square, Chegg, and Amazon. I believe that they will have more growth And as a result, I think they offer better services. And as a result, I think they will outperform Google and Facebook, especially because of what's been going on in the media lately, where a lot of these stocks have been censoring political issues. And some kind of I don't want my portfolio to be exposed to things like that, where the growth will be hindered based off of kind of the social justice, far left leaning sort of think. So trying to move away from stocks that will be affected by that. Of course, eventually we will piece out of JetBlue. We're looking for a little bit of a boost to JetBlue, and of course, to see if Play will ever come back with a dividend. I'm not quite sure, but this is basically the risk portion of this portfolio, which is why you see things like Norwegian, JetBlue, more of the stocks that have been depressed that have quite a bit of upward potential. You know, when you look at stocks like JetBlue, especially if we were to get a breakout of JetBlue above 13, and similarly with Play, we saw a little bit of a gimmick here with Play, where someone made a story about bankruptcy, but I did buy into that whole news. It was a beautiful buying opportunity. I wish I had more money at the time, and we may see a little bit of an upside, especially as depending, of course, who comes into power over the next election, whether or not we'll see maybe a little bit of a slowing down of a lot of the restrictions and the lockdowns that have been going on. Otherwise, we'll have to be, a little bit more cautious about where we're going to be putting our money. Chewy, I still like. I'm still going to be adding more to Chewy. Wells Fargo, like I said before, I do like Wells Fargo. I will be adding more to Wells Fargo, and eventually I was thinking of moving out of Foot Locker. Foot Locker has been holding $38. Which is where we fell off from. So Foot Locker fell off from about that $38 mark. We're currently at that $38 mark and we're holding. If we can get a close over the next couple of days, we might see a breakout into the low 40s. Not really crazy about Foot Locker. Foot Locker, though, at one time did pay a solid dividend, but of course they have suspended that as a result. It is in the retail section. We are seeing a little bit of a bump to retail into things like Foot Locker as well as the Gap. As you can see, the Gap is breaking out, having a little bit of a breakout, but we may see a little bit of a pullback at $20. But in any event, like I said, with Foot Locker, we'll probably end up, if we do see a little bit of a pullback, it will probably be to about that $34 mark. But realistically, I may end up selling it, taking the profits in Foot Locker, as we are up quite a bit on the little bit of money that we put in roughly about $600, and we're up roughly about $200. And so I just may take those profits and then basically roll that whole $870 some odd dollars back into this to this portfolio, so that I can start earning some dividends, as that is basically the purpose of this account, is to earn basically cash flow. And that's basically what we're looking for this particular portfolio for this month. We'll have to wait and see. And I think that's basically it. There hasn't been a whole lot going on. The market's been fairly choppy, and I've just basically been playing the channels. Like I said in my previous videos, I pay attention to the supports and resistances, and I basically add at the supports, and then pay attention to see if we're going to be breaking out into a new channel, to new highs, or if we're going to sit here and just basically channel for the next month or so. Probably what the market is going to do as it waits to see who is going to become the president for 2020, whether it will continue to be Donald Trump or if it will be Joe Biden. Both of those, of course, will have implications for the market. We'll just have to wait and see. But anyways, that's basically going to be it for this video. I'm going to keep it short, as there wasn't too much going on. Didn't make a whole lot of changes for this particular month so far. Just steadily adding into the portfolio. Looking forward to it. We should have an end of the month portfolio video that's going to be pretty good. Probably going to be well north of $100. And of course, my goal for next month is going to be $300 by the end of the year. By the end of 2021, the goal is $300 in cash flow, in dividend cash flow every month from this portfolio. Of course, if this is your first time here, thank you very much for watching. Of course, feel free to like, comment, and subscribe so that you don't miss out on future content, and I'll check you out next time.